Hello everyone, today I'm going to talk about calculating the basis of an asset. And there's very strong importance on this. We need to understand how to calculate the basis of an asset to understand if there's a capital gain or a capital loss. Let's talk about basis in general. To correctly calculate gains and losses, you must also understand the concept of basis. The initial basis of an asset is usually its cost. However, there are instances in which the basis is determined based upon the fair market value of the asset when acquired by the taxpayer rather than its cost. Typically, when property is acquired by inheritance and sometimes by gift, the cost basis of an asset may include sales tax charged during the purchase, freight in charges and shipping fees, installation costs and testing fees, delinquent real estate taxes that are paid by the buyer of a property, the cost of any major improvements to the property, legal and accounting fees for transferring an asset, legal fees for obtaining title to a property. And these will increase the basis of an asset, just to let you guys know. So look out for that when you're doing your homework. Let's give some examples. Braulio purchased a parcel of farmland for $45,000. A few weeks later, Braulio is served with a lawsuit paperwork by the ex-wife of the former owner of the farmland, stating that the sale was illegal. And the sale happened in 2022 for $45,000. Keep that in mind. Braulio paid $7,800 for an attorney's services to defend the title, and he eventually prevails and the lawsuit is deemed frivolous. Legal fees incurred in a title dispute over real property are not currently deductible, but they do increase the property's basis. Therefore, Braulio's adjusted basis in the farmland is now $52,800. That's the $45,000 original cost plus the $7,800 in legal fees to defend his title to the property. Let's do another example. Ambrosio purchases a new vehicle for $15,000. The sales tax on the vehicle is $1,200. He also pays a delivery charge to have the car shipped from a dealership in another state to his home. The delivery charge is $210. Therefore, Ambrosio's basis in the vehicle is $16,410. That's the $15,000 original cost. That's the $1,200 sales tax and the $210 for the delivery charge. Let's do another example. Cassandra is a self-employed copywriter who reports her income on Schedule C. She purchases a powerful new laptop for her home office. The laptop costs $3,540 with an additional $194 for sales tax. Cassandra's basis in the computer is $3,734. That's $3,540 plus $194, which the $194 is the sales tax. The $3,540 was the original cost of the laptop. This is also her basis for depreciation. Let's do one more example. Calix buys a house for $120,000, which he plans to use as a personal residence. 4 months after he closes the sale, he paves the driveway, which costs $6,000. Calix's adjusted basis in the home is now $126,000. That's the $120,000 original cost for the house plus the $6,000, which is a major improvement. So just think about that. Now I want to talk about in order to correctly report a taxable gain or loss related to the disposition of an asset, a taxpayer needs to identify the asset's holding period. Is it short-term or long-term? Short-term property is held for 1 year or less. 1 year or less. Now listen up very closely. A long-term property is held for more than 1 year. At least 1 year plus 1 day. A lot of students confuse this. If you get an example where they tell you, hey, the asset is sold for 1 year, 1 year is not more than 1 year. 1 year is 1 year. That's a short-term gain or loss. If it's a year and 1 day, then it's long term. A year and 2 days, then it's long term. So keep that in mind. Let's do a quick example. Kenji purchased 75 silver coins as an investment on January 1st, 2022. The coins cost $23 each, plus an additional sales tax of $67. Kenji's basis in the silver coins is $1,792. That's $23 times 75 coins plus $67 of the sales tax. On November 10th, 2022, Kenji sold all the coins to a collector for $1,900. His net gain is $108. $1,900 minus $1,792 basis. Kenji has a $108 short-term capital gain because he held the coins for less than 1 year. So keep that in mind, everyone. All right, now I want to talk to you about another situation. I want to talk about inherited property. The basis of inherited property is treated very differently for tax purposes as compared to gifts. In most cases, the basis of inherited property is the fair market value of the property on the date of the decedent's death, regardless of what the deceased person paid for the property, or the adjusted basis of the property or the adjusted basis of the property right before death. In addition, when inherited property is sold by the beneficiary, it is deemed to have a long-term holding period, regardless of how long the beneficiary held it. When inherited property is sold by a beneficiary, the gain will be calculated based on the change in value from the date of death. This usually results in a beneficial tax situation for anyone who inherits property because the taxpayer generally gets an increased or stepped up basis. Let's do a quick example. Roseanne's uncle bought 300 shares of stock 10 years ago for $850. Roseanne inherited the stock when her uncle died. On the date of his death, the stock was valued at $9,000, so Roseanne's basis is also $9,000. This is a stepped up basis. Roseanne later sells the stock for $11,000. She has a capital gain of $2,000. That's the $11,000 minus the $9,000. However, there are cases in which this rule can work against taxpayers. Although the value of most properties such as stock, collectibles, and bonds generally increases over time, there are also instances in which a property's value drops. This creates a step-down basis. Norbert purchased a home. This is an example, of course. Norbert purchased a home with cash in Connecticut for $240,000. His neighborhood becomes riddled with crime, and Norbert's home declines in value. On February 3rd, 2022, Norbert dies. On the date of his death, the home's fair market value was only $198,000. Norbert's daughter, Nikki, inherits the home. Nikki's basis in the home is $198,000. This is a step-down basis situation. Alright guys, I think we've talked enough about calculating the basis of assets. Let's go ahead and continue learning, and we'll talk more about standard deduction and itemized deductions in the next video.